Thanks for joining us again, everybody. Well, back with another great episode. As always, I have my partner and friend, realtor Regina Chen, joining us today. And we're going to be talking about something that we're hearing a lot about lately, which is, with everything that's going on, everything that we just went through through the lockdown, everything that's going on, with the geopolitical and the global crisis that's happening right now out there with the conflict. Do we see prices coming down? Are prices going to come down anytime soon? So we're going to discuss this today. Before we bring in Regina, please don't forget to like, subscribe, and hit that bell. With that said, let's get started. All right, Regina.
Hey, Barry. Good to be back.
I know, long time no see. So, Regina, whenever Regina and I prep for this, we're just kind of comparing notes. And I think not just our clients, but just in general, like people, whether or not it's your coworker or, my neighbor. I'm a great neighbor here who has a beautiful young daughter who was having a party for his daughter, and they brought a little pony and little petting zoo, and it's so cute. And I was out there talking to him. He's like, Barry, he's like, with everything that's going on right now, like, aren't prices going to come down? Like, they can't keep going up like this. So Regina and I were talking about this. We thought, well, let's talk about this. So Regina, what have you been hearing from your clients?
Yeah, totally. Your experience echo mine, right? Even people who are not thinking about, not in the market to buy or sell, it's always a hot topic. When you're in a social event, we always want to ask that, how is the market? What's still going up? Yeah, the reality is, yes, it's still super hot. And it seems like the people never stop trying to anticipate or asking, when is the market going to crash? So let's talk about that. I want to share like from different aspects to share that, because Barry and I chat all the time. Short answer is no, we don't see the market going to crash in anytime soon. And we're going to break it down, say why we're saying that. We don't feel that the market's not going to crash. We're going to share with you what's the data, the information support that opinion. Okay, so feel free to jump in anytime, but I just we can talk about in terms of like how is like because every time when people think about market crashing, they always refer back to 2008, because that's what happened that time. I just want to talk about that, compare, and you can definitely feel in more detail. I feel the lending standard has changed a lot. It's not the same at all, right? Totally different situation. We can talk about that. And my client love to ask that, what about forbearance? I think there's going to be foreclosure coming soon, right? But short answer is no, I don't see any foreclosure in Irvine or even in Orange County, very like a handful, just no comparison from before. And also I want to talk about just from the supply perspective, inventory level, and the demand days on market. So I will tell you that why I don't think the market is going to crash. But first of all, let's talk about the lending standard. Based on what I limited knowledge, that's why I want Barry to jump in to supplement all the details. That back then it's easy. 2008, almost everybody can get a loan. When a lot of times those people are not supposed to get approved for a mortgage at all, and not good credit and not sufficient income. Yeah, help me out here. You probably have a lot of real time story to tell us why now it's so different from 2008 from mortgage perspective. I mean, people get approval for loan.
That's right. Regina, she is spot on, at all of the things that she's alluding to. Like, so I've been doing this for a little over 20 years, you guys, and I was in the market back when this all happened. And I often explain to people that, I did everything I could to try and be, as honest and transparent. And I've always wanted to do a good job for my clients. But if you've ever saw the movie The Big Short, if you have not seen it, I highly recommend you watch it.
Yes, that's a good
The
one.
corruption was just rampant in the industry, and it wasn't just our industry. We're talking about, credit default swaps, which is a really big fancy term, where basically they were gambling with all of these mortgages. They were bundling them up with really good ones with some really crummy ones, and this caused Wall Street to get in and go, hey, we like this, we like all this money, let's start relaxing the standards. We don't need you to have to prove that you make $10,000 a month. We don't need you to come in with a bunch of money. The market's on fire, everybody's making money, let's do this. And we were getting calls from like little old ladies in Fontana that were telling us, well, my neighbor bought a house and, they sold it like 6 months later and paid and made $50,000. And, they said I could do the same thing and I want to do that too. And you would go, okay, well, let me ask you, Gretchen, what do you do for a living? Well, I'm retired. Okay. And how much money do you have coming in monthly? And you could see, you could almost hear the little Tweety birds, they'd go, like they had been coached, $10,000 a month. And you knew that this client was not being truthful. You knew that they were probably surviving on Social Security, but you couldn't really say that to them. You couldn't call them a liar. And you knew as soon as you got off the phone with them, these clients were getting calls from 2 or 3 lenders a day trying to get them into a loan. You knew that somebody was going to give them a loan. So what happened is that, all these people got loans and all you needed was a pulse. You didn't have to prove your income. You didn't have any money down. You didn't even need to have great credit. They just charge you a higher interest rate. I mean, it was really arbitrary. And as far as, my industry goes, I got to be honest with you guys. We got a black eye for a reason. The mortgage industry had people that were flipping burgers at McDonald's one day, and they were selling loans the next. They didn't even know how to spell interest rate, and yet they were selling loans. So when everything collapsed, what happened was, and I'll show you guys a few slides to kind of back up what I'm getting at here, is what happened was that, there we go. What happened was that, there was just this massive flux of inventory. People were buying and selling so quickly. You can see the inventory back right before the mortgage collapse was at its peak, was massive. There's a 4 million house deficit right now. That, in other words, the builders have not been able to fill this hole between 2006 to today. And what we see is the percentage of homes that are available are down 71% since 2007. You can see the year over year change in inventory is actually down 27% from last year in the state of California. And you can see throughout the whole country. I mean, the only place where we don't see a negative looks to be Idaho. I'm really curious to see what's going on in Idaho. But what I want to show you guys is this is the kind of stuff you guys are reading, which, doesn't surprise me if you think that housing is going to go down. But when you read in the fine print, it talks about new home builds only rose only 6%. Well, it's not because the demand isn't there. It's because there's no supply. We know that births went up dramatically 33 years ago, and the majority of the buyers out there are millennials now, which means that we see this continuing. The demand is going to continue. Credit availability, this is when you only needed a pulse right here to get a loan. You can see it's almost flatlined.
Yeah.
You can see that the default risk in the mortgage industry is almost non-existent because after the mortgage collapse, the government stepped in and put in safeguards to protect all of our investments. So if you're currently a homeowner, or if you're thinking about becoming a homeowner, you can know that you're purchasing in a safe market, because everybody since the mortgage collapse have had to prove that they could afford to buy a home, right? We know that the year over year in equity has gone up just I'm talking the entire state of California. The majority of homeowners are at least $120,000 better off than they were before. So guys, the question is do we think that the value is going to go down? The only reason why the value would go down, given my perspective, is if we see a massive flux of inventory. Now, the thought that the forbearance is going to cause, a bunch of foreclosures, or that, the economy slowing down is going to cause, is nonsense. The real estate has gone up over 20% just in the last year. If you are currently a homeowner and you have $200,000 or $300,000 in equity in your home, are you going to let the bank come take your home?
No.
Heck no. You're going to sell it. You're going to call Regina Chen and say, Regina, I want to sell my house because I can't afford it any longer. And Regina's going to go and get you top dollar for that house. So the idea, go ahead, Regina.
I was thinking that they probably have other options too, right? Without selling it, because they have the equity in there. Maybe they can take, I don't know, like loan line of credit or HELOC and breach them through. Maybe they lose a job or whatever. They'll have that cushion, like different option without foreclose it, right? Correct me.
Well, yeah. And I mean, in forbearance, they made it a mandate that the banks have to work it out with you. Now, there's going to be a few people that maybe they lost their jobs permanently and they realized, I will never be able to afford this house like I could before because I don't have a job anymore. Those are the people that are going to go sell their homes. Or I can tell you what we see happening right now, and Regina can probably testify to this. We see more people wanting to sell their homes because they want a bigger place, not because they want a smaller mortgage or a smaller house. Exactly. It's because they realize, oh my gosh, like since the lockdown, I haven't had to go into work. I'm doing really well, but I'm just feel claustrophobic now. I need a bigger place. I see my kids growing up. They're going to need their own rooms eventually. So we see more people that are trying to actually buy a bigger home than we do people downsizing. Do you think that am I being, I mean, you got
yes,
boots
that's
on the
what
ground,
I've been
Regina.
seeing too. I agree. And also, Barry, you mentioned, touch upon on the inventory, right? Like after the peak or the crash, the home inventory hasn't the gap, the hasn't been closed yet, right? So we have already like the low inventory been cooking even before the lockdown. Then I want to come from talking about that another demand side from a demographic perspective. Out of all the different generation, the millennials, that they are accounted for like 82 million out of the U.S. Population. It's a huge group. And for probably 1/3 of them, they're between like 28 to 33. They're at an age, they're ready to get married. They're ready to become a homeowner. Maybe if they are a renter, they're thinking about start a family. They need baby. And so they have a very legit, strong demand for home. So they are entering the housing market. And based on the economist forecast, it's probably at least going to take another 5 years to absorb that demand. Obviously, not all of them will be able to get approved or can afford to buy a home, but it's still like a very huge number. So we kind of like see a cross, right? The supply is going down. It's not just happened recently. It's just been like since 2009, and it's been like haven't been turned around the trend yet. So this is just your supply, and the demand is going up with the first-time home buyer, and people are trading up. They want more space, right? Bigger home. So we see like a very bad cross. That's why we're in the situation where we're at right now. And that's all the reason we think that. Main reasons because that we don't think it's going to crash. It's a result of the supply and demand we just talked about. There's still so many huge demand for home, and we don't know when the inventory side, supply side, gonna hopefully gradually pick up to stabilize, make the whole situation more balanced.
That's right. Well, in addition to all of that, we what we see happening also is because our work environments have changed and we don't all have to be to work every day of the week. Most of our employer, not, I won't say most of our, I will say a lot of my clients are, their employers are like, we're fine with you continuing to work from home. They're like, okay, well, do I really need to be in Orange County then? This is why we see them moving to Texas and Arizona and kind of all over the place. And we've seen a massive surge out in the Inland Empire. I used to get into debates with people where they go, oh, well, the Inland Empire doesn't go up as high as Orange County. I got news for you. The Inland Empire actually went up faster than Orange County did last year because, they were starting from a lower level. So the people that are getting priced out of the markets, they're moving into the suburbs, so
Right.
that's just, there is nothing out there that is making us to believe that we're going to see a huge drop. Now, the one thing that has come up that kind of spawned this with Regina and I, the one thing that's happened that we haven't seen happen, at least probably in my lifetime. Well, that's not necessarily true. I mean, I guess you could call it what happened in the Middle East. We definitely were at war. But what's going on right now, with the conflict overseas is kind of a global catastrophe right now. And people are going, uh-oh, like, how is this going to affect people buying homes? Well, if inflation goes up and interest rates go up, will it thin out the herd? It will.
Mm-hmm.
But Regina, you would agree with me. I mean, if we had 3 times the amount of houses that we do right now, you could probably sell every single one of them within a matter of days, right?
Definitely. Yeah. In terms of we're still like Orange County, Southern California. We are seeing, probably like only one fifth of the level to what we used to have. Like 2018, we're around like 50,000 home for sale. Now, like we only have like around 10. So it's a huge gap. Even like we start to see we're getting to our peak season, spring market. Traditionally, that's we have the most activity. So we do see more inventory coming on the market. But
Thank
it's
God.
still, it's a huge, it's like we used to have 5 times more. We definitely not at 5 times more inventory as I see it now. Slowly creeping up a little bit, still a huge gap between the demand and supply.
That's right.
Which I don't see is going to be close like over month or even a quarter.
That's right. Well, I think the message here is that, I'll tell you what I try to tell my clients. If you're looking to buy a house because you're trying to turn a profit, you're trying to buy a home and flip it or something like that, I can understand the trepidation. Prices have gone up. You better know what you're doing if you're a house flipper or, but if you're talking about buying a home to live in, a place where you're going to raise your kids or retire in, or, you got to think in the longer term picture, and I'm sure you all, if you look back at where prices were 10 years ago, or think about where they were 20 years ago, you would realize, God, I wish I could go back 20 years and I'd buy as many houses as I could get my hands on. Right.
Yes.
So yeah, I do think that the prices I think that the escalation of prices will slow down at some point. I don't think you're going to see the market go down anytime soon, but we can't keep going up 20% at a clip. It's got to slow down. Regina mentioned 10%, which I think is definitely more than doable. Stephen Thomas is somebody that Regina and I both follow. He's a local economist here who is entitled. He's kind of a well-known personality in our area. And I watched a video that he did on last Friday. I think he said that there was like 300,000 homes in the entire United States last week. I mean, there's 330 million people in the United States. That is not even a fraction of what we need, right? So, I don't have a crystal ball, neither does Regina. I guess anything could wind up happening, but you can't make plans based on an outlier. You
Yeah.
can't look at, oh my gosh, if I get hit by a car, I'm gonna leave my whole family. What's the likelihood you're gonna get hit by a car? It's probably unlikely if you look both ways before you cross the street, right? So go into this with an attitude that you're going in with good information. Regina will try and educate you. If I'm so lucky to be able to talk to you as well, I'll do the same thing. Let's talk about your individual situation. If you don't want to talk to me, I suggest you have a talk with your current lender and ask them to get more granular with you and to talk about what's going on not only with the economy but what's going on overseas with the conflict, and whether or not in the next 5 to 10 years you imagine yourself being in a bigger place. So I hope everybody got something out of this. What did I not touch on, Regina, that you
No,
think everybody needs to-
I really like what you said, that there's never like a one size fits all. Every family situation is different, and your time frame and the reason why you want to move is different. So we always bury on our both, like believers in education. We love to share what we know, and we also believe like it has to be a very personalized, customized of each family, each situation. Even our suggestion right now, as time goes by, might not be the same recommendation. So it's always good to, and we offer this complimentary consultation for free. There's no obligation. So just take advantage of that. And even after a while, you want to update, maybe you had a call with a different professional, always want to get a second opinion. We're always here. We're up for that all the time. And also, I just want to go back to what Barry says, that I think for most, like even for stock market, anything, it's like we can look at the long-term trending. In between, there's always up and down, like mortgage rate too. It's going to continue to change and fluctuate. That's why we continue to do this kind of video, keep you posted of the latest development. Like what we're talking about today is based on currently right now, the snapshot, what's going on. As we know it, like world just keep to change, the earth continue to spinning. So we will continue to provide you the most updated information. And we offer you this customized consultation. So reach out to us. We love to sit down with you and strategize with you.
And even if you don't want to talk to us, and you got something out of this video, it's a win for us. Forward this to somebody that you think could use this information, because I know I won't speak for Regina, but I will speak for myself. I just happen to know Regina is of the like mind, is that, if you put enough good information out there and you help educate the general population, it winds up coming back to you eventually, whether you're the person who's watching this, it becomes our client, or whether or not we helped you buy a house with your lender, your current realtor. We just want to try and help. So we appreciate your time. Thank you so much, Regina, for doing this again with me. And keep an eye on Regina. Regina, your the website that people should keep track of you at is that Regina Chen. What is your website?
Realty.com. ReginaChenRealty.com.
ReginaChenRealty.com. You can keep an eye on what she's up to. Also connect with us on Facebook, on Instagram, and don't forget to like, subscribe, and to hit that bell. Everybody, hope you have a great day. Take care.